Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical support and demand area. From here, in fact, all these previous rejections to the upside have been created, and every single time the market tested its zone, it got rejected to the upside quite aggressively. Now, as the market is testing the exact same zone and has already started rejecting it to the upside, we could expect more potential bullish continuation to be created away from this level. So the monthly time frame at the moment seems quite bullish, and we could expect more potential bullish price action to be created away from this level. We can also notice that from a pattern standpoint, we have a very clear impulse to the upside followed by this correction. And in general, after an impulse, if you measure the correction by taking your Fibonacci from the low to the high of this impulse leg, we can notice how we have the 50%, 0.618 and 0.618 Fibonacci retracements all lining up with this same area of historical support and demand, therefore creating a confluence of support and demand. And inside of a confluence of support and demand, there is an increased probabilities of seeing institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this zone. So the monthly time frame definitely seems quite bullish. Now let's drop down on the weekly time frame and see what we have. Well, from a weekly standpoint, the situation is quite clear as well. We have a market which has quite strong structure exactly at this zone, which was acting as previous resistance here, turned support here and here, again support here. Then the market created this fake breakout to the downside, broke back above, and now it is again acting as support. Now, when you have a horizontal level of structure which was already acting as strong support, and we have a fake breakout lower, break back above, the natural movement of a market after this in most cases is to go for a retest and then reject to the upside. That is what usually the market tends to do. So there is the possibility of seeing a test of this level and then a rejection to the upside away from this zone. Dropping down on the daily time frame, what do we have? Well, from a daily perspective, we can notice how this level is already strong support, was acting as previous resistance here, again here, now it is turned support here and here. And I also spoke about EURUSD quite a few times in the past. I spoke about it after this impulse and correction. I explained all the reasons for which from here there was the possibility of this rejection to the upside, and that is exactly what the market did. Then we had the creation of this M pattern. From here, I explained all the reasons for which we could expect the potential completion at the neckline, and again, that is exactly what the market did. And after that, I made another breakdown explaining all the reasons for which this level was strong resistance, and until the market would remain below the zone, we could not continue higher. In fact, the market did not break above the zone and remained below the level. And by the way, I will link in description all those previous analysis, so you can go and check them out for more free education. Now, at that specific moment, as we were saying, this level is acting as strong support. So what is important to see is if institutions are actually longing inside of this support zone. To do that, we have to check the commitment of traders and look at the data precisely for the euro. Now, if we look at the data for the euro, it's important to keep in mind that already we're looking at euro USD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been massively increased. We went from having minus 9.9k net positions all the way up to plus 41.4k net positions. And with this massive increase in net positions, we can notice how we also had a huge amount of longs getting added and shorts getting closed from an institutional perspective. With the very last report, 4,100 longs added on EURUSD from an institutional perspective and 20,000 shorts getting closed. So as institutions are moving to the bullish side for EURUSD, what could we expect? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. As I was saying, with institutions adding longs inside of this area and the market testing support, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside away from this confluence of support area. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.